So thank you all for joining us. The aim of today is to go through some innovation related incentives for the manufacturing industry specifically. We've got a Q&A session at the end, but please, this is supposed to be an interactive session. So whenever you like, feel free to jump in with any questions you may have. You'll be surprised if you've got a question on your mind, it's probably something that someone else is already thinking. So either jump in and ask the question verbally or just use the chat function, because I've got that open on the side of the screen so I can view the chat in live in real time and answer any questions you may have. We've also had some couple of questions come in beforehand, so I'll address those at the relevant points as we go through. So guys, kicking off, I'll tell you a little bit about BridgePoint Group. So BridgePoint Group's been around for over 10 years. A professional services firm, started off doing accounting and tax work, but really specialising in business services, business growth. The part of BridgePoint Group that I head up is the Innovation Advisory Division. So we help clients obtain various government grants and incentives. But the main one we're going to be focusing on today is the R&D Tax Incentive. So today we'll go through what the R&D Tax Incentive is, how it actually works, some details behind it, how it applies to you, and also we'll touch on some other government grants and incentives that are available. And we'll have an open floor session at the end where people can share their thoughts, questions, and whatever else they'd like to discuss. So we've been working in the government grant space for close to 12 years now. We help companies, both large and small. We've helped them secure millions of dollars worth of tax offsets and cash refunds. One of the questions that was posed to us before we started this is, hey, I'm a profitable company. Do I still get the R&D tax incentive? The answer is yes. Because you're profitable, you get what's called a tax offset. It just minimizes the tax you have to pay. Another question we got was, because I'm in losses, do I still get the R&D tax incentive? And the answer to that is still yes. You still get the R&D tax incentive, but you get it as a form of a cash refund. So that was probably the two of the main questions we got at the start of the seminar, and I thought I'd just get that answered right off the bat here. So this is an incentive which is available to both companies large and small, and we assist companies both large and small into getting the R&D tax incentive. So what is it? It's a federal government initiative. It's actually been around since the mid-1980s. Not many people know this. And the underlying aim is to foster Australian innovation. It's very much in line with all the other OECD countries who have R&D tax incentive regimes in place. Around the world, the R&D tax incentive regimes are based off what's called the Frascati Manual, and this was written, nearly 50 years ago now. But our R&D tax incentive was pretty much based on that and has since been refined to what is known as the R&D tax incentive today. It's not very well advertised in the fact that 70% of eligible businesses do not claim the R&D tax incentive. So year on year, the data that we get from Oz Industry is that there's only roughly between 13 to 15,000 R&D claimants a year, which is a surprisingly very low number considering how much Australians invest in innovation and how many small to medium enterprises there actually are in Australia that are conducting R&D. So a lot of the time when we speak to businesses, the first thing they say is, well, how come I never heard of this? Well, it's a bit unfortunate because it has been around for so long. It's just very underutilized. So how does the R&D tax incentive work? So if we put the R&D TI at the top, the first row there is Oz Industry and the ATO. So these are the two government bodies that actually regulate the R&D tax incentive. So if we were to break it down into its simplest form, Oz Industry, they care more about the technical aspect of a company's R&D claim, and the ATO cares more about the costing side of things. So what we do is, with Oz Industry, we have within 10 months after financial year end to lodge what's called an application form. So for companies with a 30 June year end, you have until 30 April the following year to lodge an application form with Oz Industry. In this application form, you detail, these are my R&D activities. this is what I've accomplished during the year, and basically this is how what it is that I'm doing constitutes eligible R&D within the realms of the R&D tax law. Oz Industry receive this application form and they provide what's called a registration number. And this registration number is quite important because on the other side of the equation, you've got the Australian Taxation Office. So when you lodge the company tax return, you include what's called an R&D schedule. And within this R&D schedule, you disclose all the costs associated with the activities that you conducted in the prior year. So salary costs, direct costs, contractor costs, even portion of overheads. You include all that in the R&D schedule, and it forms essentially an appendix in the company tax return. The important thing is, at the top of the R&D schedule, you include the registration number, and then this registration number informs the ATO that, right, the numbers included in the tax return, the R&D schedule, relates to activities that have been lodged with the Oz Industry in the application form. And that's how the two parties, Oz Industry and the ATO, communicate with one another and vet that you've conducted the process correctly of lodging your application with Oz Industry and then in turn claiming the costs related to it. So we've got a question in, so who can claim the R&D tax incentive? Yes, you do have to be operating under company structure, so you can't be a trust or a partnership. You've got to be a PTY Ltd or an Ltd in order to be able to claim the R&D tax incentive. The incentive details, so what is it that we actually get? Why are we going through this process? So for the financial year ended 30 June 2021, there's two tiers, and it's broken down into whether your aggregated turnover is less than or greater than $20 million. So aggregated turnover in this instance means the turnover of the company that's claiming, as well as any subsidiaries or any companies that it controls. So for companies with less than $20 million worth of aggregated turnover, you get a 43.5% refundable tax offset. For companies with greater than $20 million worth of turnover, you get a 38.5% tax offset. So a key thing to note here is that if you're less than 20 million, you can potentially lock in that refundable component. So a very fancy way of saying, just say, for example, you spend 100K on eligible R&D activities, you get a 43.5K tax offset. So you've got to use that 43.5K to pay any tax owing to the ATO. If you have no tax owing, that 43.5K actually gets refunded to your company's bank account. If you got greater than $20 million worth of turnover and you spend 100K on R&D, you get 38.5K, which you've got to use to pay any tax owing to the ATO. If you got no tax owing, that 38.5K actually gets carried forward to future financial years. From 1 July 2021 onward, the regime has actually changed slightly. So there's no changes to for companies less than $20 million worth of turnover. However, what they've done is they've put in an R&D intensity test of 2%. So basically, if your R&D expenditure is at least 2% of total expenses, then your R&D offset rate actually lifts considerably. So your R&D offset rate, if it's greater than 2% R&D intensity, it's your corporate tax rate plus 16.5%. So if you've got a company tax rate of 30%, then your R&D offset rate actually becomes 46.5%. If your R&D intensity is less than 2%, then your R&D offset rate becomes your corporate tax rate, which let's say is 30%, plus 8.5%. So back to 38.5%. So really this is aimed to reward larger companies who are conducting more R&D. So really the Australian government here is really helping foster innovation into both large and small companies. So we've got a question here about, can a company that is using a co-manufacturer to produce their goods apply? Yes, they can potentially do that. It depends on the arrangement between the company and the co-manufacturer. Basically, in the R&D tax incentive legislation, they have rules which determine which one of those two parties can claim the R&D. So if you're contracting the R&D to someone, you've got to look at the contractual agreement to make sure that basically only one of the companies is claiming that R&D because the government doesn't want to provide two sets of benefit for the same R&D activities being done by two different companies. Essentially, the system is getting double dipped into. So yes, you can apply it. Co-manufacturer can apply it. You just got to look at the agreement that's in place. So we'll just move on to how does it apply, to my company? How does it apply to manufacturers? Basically, in the manufacturing industry, there's two main, avenues of R&D claims. There's the design and development of new products, as well as the design and development of new processes. Sometimes these two avenues even overlap. So just say, for example, you've designed and developed a new product that you need to conduct R&D on in order to be able to sell it to the market. And as a result of this new product, you need to design and develop a new process as well. Then you can claim the R&D tax incentive for both the new product and the new process. An important thing to keep in mind here is that when you talk about product and processes, there's also this concept of feedstock and dumped feedstock in R&D world when it comes to the manufacturing industry. So if you're conducting R&D and you need to do a trial run to either fine-tune a new product or fine-tune a new process, the raw materials plus the energy that goes into the first set of trial runs, what we call the R&D phase, you can claim as part of the R&D tax incentive. So all the feedstock that gets dumped, you can claim the cost for that as well. You just need to keep record regarding the trial runs, how much, for example, cost per kilogram was used, and you can flush out that details and include it as part of the R&D claim as well. Where the R&D kind of stops at that point is when the process has essentially been finalized and it works, and then from that point onwards, it's no longer R&D, it's considered commercial, and that's when the R&D phase of it stops, and as a result, the costs you claim can't be included from that commercial point onward. But the two main avenues we're talking about when it comes to R&D for the manufacturing space, if you're designing and developing a new or improved product, or if you're designing and developing a new or improved process. What does it mean from a new process perspective? This is a question I get asked a lot. So basically, when it comes to a new process, it's got to be some sort of manufacturing technology or methodology which either doesn't exist or you've done the research into the market and there's no, for example, there's no line for this available which you can just purchase off the shelf, plug and play. It requires you guys to come up with a bespoke process to trial it, test it, make sure it works, etc. The new product one, it's a little bit more self-explanatory. You're literally designing and developing new products which you plan to sell to the market at a later date once you get that new product off the ground. An important thing to note when it comes to products or processes, a failed product or a failed process still constitutes R&D. So this is a question I get a lot, is that I've tried to develop this new product, but I couldn't get it to market. Can I still claim R&D? The answer to that is yes. Although failure is not good from a commercial perspective, it's normally a good indicator of an R&D activity because it shows that there's that technical uncertainty and you're going above and beyond what's currently known. You're pushing the envelope when it comes to innovation. So you can still claim the R&D tax incentive for failed products or processes if it doesn't work. That kind of wraps up the R&D tax incentive side and kind of goes through the main things I wanted to talk about from the R&D tax incentive. Andrew, you discussed patent costs, etc., and I think that's a good segue into highlighting what other help is available to manufacturers. So the R&D tax incentive is probably the most clear-cut government grant which is available to the manufacturing industry here in Australia. There's a ton of manufacturers out there who have no idea about the R&D tax incentive and should be claiming. And, the more knowledge they have, the better off they are, the more they can claim. But there's other help available too. Australia has in place what's called an export market development grant. And as the name suggests, it helps Australian companies, promote their brand and their product or process overseas. So you can claim the EMDG as well through the federal government. There's also what's called an accelerating commercialization grant. So if you have a novel technology that you wish to commercialize domestically and internationally, you can claim the accelerating commercialization grants as well. There's, for example, the manufacturing modernization grant. This manufacturing modernization grant has gone through 2 different rounds in 2 years. Normally, it opens in December and closes in January, and it seems to be quite successful. So I wouldn't be surprised they go for round 3, December and January coming up, where you can get grant funding for the modernization of your manufacturing line, purchasing various capital equipment, etc. There's also other government grants and incentives which kind of pop up from time to time. For example, there could be a government grant popping up soon where it helps incentivize AI adoption within the manufacturing process. Or it could be aimed towards regional areas, helping regional manufacturers grow or purchase more capital. These other government grants are things that pop up from time to time, and it's quite important to be on top of these because you never quite know whether your company is going to fit the bill and fit the profile. The grants listed here, the EMDG, accelerating commercialization, manufacturing modernization, they all kind of vary in terms of government funding. At a high level, the EMDG, you can get up to 50% of your eligible export promotion costs back. Accelerating commercialization, they match dollar for dollar up to $1 million for that one. Manufacturing modernization, it depends on how much funding is available, but again, they can match more than dollar for dollar potentially, as well as other government grants and incentives, just depending on the various government grant. There's potentially hundreds of thousands of dollars that are available. You just have to apply for it on time and essentially go through the grant criteria and show A, how your company fits the criteria, and B, how your activities fit what it is that the grant is trying to achieve. And we help various companies, fill out these grant applications. So, if you were to think of R&D as domestic innovation, think of the EMDG as overseas marketing, as well as the accelerating commercialization, manufacturing modernization as grants aimed at growing, improving, purchasing additional capital, whatever the case may be. So, that's kind of everything in a nutshell. I'll open the floor up to Q&A now, and I see there's a couple of questions coming in regarding both R&D and the EMDG. So the first question about R&D, what documentation should I keep to prove my R&D claim? A good question. So basically there's 2 types of documentation which you need to keep in order to prove your R&D. The first is the technical side of things. So you need to be able to prove that your activities were conducted. Oz Industry doesn't have a set formula of how you need to keep A, B, and C. They just want to have documentation which shows the experimentation that was conducted, as well as the steps that you took to get to the point that you got to. So it could be documentation as informal as email correspondence. It could include business plans, technical write-ups, schematical diagrams, essentially anything which proves that your R&D went from the phase of concept to design, development, and testing. Normally, we find that a lot of companies keep good progress reports, whether it be through meeting minutes, team meeting entries saying, hey, this worked, this didn't work, etc. We found that for manufacturing companies, business cases are normally good piece of documentation where, the R&D team might present to the directors or the C-suite that, hey, we need this bit of equipment in order to do X, Y, and Z. And it shows that there's a business case there. It shows that, we couldn't find anything off the shelf and therefore we have to design and develop this from scratch. So the documentation, it really is anything that can prove the R&D. From a costing side of things, similar to when you lodge your tax return, documentation that can prove that A, the expense was incurred, and then B, can be tied back to the activities. So for example, if you have a contractor that you work with and they're conducting R&D on your behalf, their invoices would be fantastic to be able to prove the R&D because it shows that it was done within a financial year. The invoice description proves exactly, what was done on your behalf, and the dollar amount shows the cost that you're going to be claiming toward it. If you have people and your staff and you want to include them as part of the R&D claim, documentation or records showing that they conducted the R&D, for example, timesheets, job descriptions, position descriptions, meeting minutes, evidence showing that they're involved in the R&D for the amount of time they want to put forward. So the documentation, it is important to make sure that you have all that on file so we can not just substantiate your claim, but also maximize and pick up as much of the R&D activities and in turn R&D expenditure as possible. We've got another question here about the patent and the IP costs. So yes, you can include patent and IP costs with the EMDG. So that's an important thing to note. Although it's excluded from R&D, you can include it in the EMDG. So we often tell clients that, hey, you know, if there's a cost that you can't include in one grant, odds are you can include it in another grant somewhere along the line. It's just a matter of knowing which grants are available and seeing what you can pick up where. With the election coming up, we've got a lot of questions about government and what's going to happen if there is a change in government or continuing government. Right now, there doesn't seem to be any indication that anything's going to change regardless of who gets in. So we anticipate this structure remaining the same. And to be quite honest with you, when the R&D Tax Incentive Program first got introduced in 1986, we've only had one overhaul of it, and that was a rewriting of the legislation that took effect from 1 July 2011 onward. And that was mainly around updating the R&D tax incentive legislation for industries such as software, because I'm sure you can imagine software from back in the 80s is significantly different to what it was in 2011. So changes in government generally don't produce, any real changes to the R&D tax incentive. We've really only gone through one overhaul in the space of 40 odd years. So another question we've got now is, if I purchase goods from overseas, can I claim these expenses as part of the R&D? That's a good question. It's important to differentiate, instead of goods, let's say materials, from contractors that you have overseas. So overseas contractors that you use for R&D, you cannot include because that's R&D activities that are being conducted offshore. The R&D activities need to be conducted onshore in order for them to be eligible. However, materials purchased that you're going to be conducting R&D activities on, you can include the cost of the raw material in order to bring it to Australia, in order to conduct R&D activities on. So yes, overseas materials, can be included as a direct cost. And freight costs, yes, the cost of freight in can be included as well as part of that R&D claim. An important thing to note is making sure that you can prove the link between the purchases of the material and the R&D activities that you're going to be conducting. As long as you can prove that link, that's the key there.
Alan,
yeah.
Is there any upper limit on what you can claim under the Export Market Development Grant?
It depends on the expense category. So, for example, IP costs, etc., they cap it at 50K. Overseas representatives, they cap it at about 200K. Marketing consultants at around 50K. Trade fairs, seminars, etc., is uncapped as a marketing visit. So it depends on the costing category that you're going for.
Right. So again, purchasing patents, that's only 50K, is it?
Maxed out at 50.
Yeah, maxed out at 50.
Yeah. Question we got about audits. How active is the ATO in auditing claimants? I'll rephrase this question. How active is the ATO and Oz Industry in auditing claims? Because there's two types of audits you can get. You can get an audit for your activities, or you can get an audit for the ATO side of things. I think in the past couple of years, they probably haven't been that active, mainly because they've been too focused on other parts of its service offering, for example, JobKeeper, etc. Normally speaking, if you submit a robust R&D claim, then the likelihood of getting audited is quite low. And also what we do is for claimants, we make sure we prepare R&D claims with as much substantiating documentation as possible. So, in the case of an audit, it's quite straightforward. You can just hand over what it is you need to hand over. You can hand over all your paperwork and show your methodology, etc. We anticipate that the ATO and Oz Industry could pick up audit activity. But then again, like any government agency or any business, they've got to look at their return on investment. So they're normally pick apart the claims which aren't well prepared, which have red flags in them. So the first point of call in order to not get picked up for audit is to ensure that you prepare your R&D claim as thoroughly and as diligently and explain as much as possible in an easy to understand manner to Oz Industry and the ATO that, hey, this is what I'm claiming for, these are my activities, this is why it's eligible, and these are the costs that I'm going to be putting forward. So we've got another question here in terms of approximate timeframe. So we haven't covered this, so this is a very good question. The approximate timeframe for application and approval. So when you lodge an R&D application form with Oz Industry, if you've lodged in the past, what they're saying is that their service standard is 10 business days. Now that we've shifted to an R&D portal, we found that the service standard is actually a bit less, probably 5 to 6 business days that you get your registration number back. If you're a first-time claimant, they spend a bit more time looking through the R&D application form, and we found that anywhere between 10 to 20 business days, you'll get that registration number back. That's what they're saying, but we found that in a couple of weeks, you normally get that registration number back from Oz Industry, and then it's a matter of how quickly you can lodge the company's tax return. And I believe the ATO service standard nowadays for lodgement to processing a tax return is normally about 30 days. In terms of, we've got a question here about the BridgePoint group average, claim return in Australian dollars for the R&D. Look, it's a bit of a tough one, but I would say on average we get at least about 250K worth of R&D tax offsets. There's companies out there which say they can get the absolute maximum amount, but I think we run a pretty conservative practice in terms that we make sure that anything that we do lodge can be fully substantiated, and we prepare a very robust R&D claim to make sure we put ourselves in the best position possible. And potentially turning that into a refund, it's a very substantial part of a company's financial operations. So there's a question about how many R&D claims can I make? Basically, you can make as many R&D claims as you like. There's no limit. You just got to make sure that you can still substantiate the R&D activities that are being conducted. In saying this, we find that on average, a single R&D project normally lasts between 4 to 5 financial periods. So a company might lodge an R&D claim for that project for 4 to 5 years, and then normally at this point are starting to undertake additional R&D projects. So they keep claiming the R&D tax incentive, but they just keep disclosing different projects. We've got a question here about, can salary be included as part of the R&D grant? Yes, you can include salary. You can include salary of your staff. And I guess in this perspective, salary includes on costs. So it's not just salary, it's the superannuation, it's payroll tax, it's workers' compensation as well. These are all eligible on costs, which gets included as part of R&D salary. As a director of the business as well, you can also include your salary or director fee that you get paid, provided that you're conducting R&D activities, of course, and provided that those fees are actually paid into your bank account. It's not just some sort of accounting entry. So there's 2 different types of salary, I guess. There's salary expenditure of employees and staff costs, and then there's associate expenditure of directors, etc. And you can still include the amounts that you get paid. It just gets disclosed as associate expenditure. So thanks for that question there. An important thing to note that's directly linked to salary expenditure as well is overheads. So as part of an R&D claim, you can include overheads that hit your P&L, which are part of your R&D activities, but also part of the cost of running your general business expenses. So for example, rent, electricity, telephone, internet, you can claim a portion of these expenses as part of your R&D claim using an apportionment methodology. So the main one that a lot of companies use is R&D salary divided by total salary. So let's use an example of, let's say a company has 200K worth of total salary expenditure and there's 50K worth of R&D salary expenditure. They can include 25% of the rent, electricity, telephone, internet, etc. as part of the R&D tax incentive claim, because on average 25% of people's time is spent on eligible R&D, and therefore you can include 25% of these eligible overheads. So it helps increase the claim amount, because you're not just including salary, contractor costs, direct costs, feedstock. You can also include a portion of overheads. You can also include a portion of decline in value as well for assets that are used in R&D activities. So there's plenty of cost categories there which you can pick up, which some people might miss out on if they're not diligent enough. So there's one more question. Early stage innovation company also claim R&D. So the early stage innovation company, ESIC as it's called, it's a federal government program which was introduced a handful of years ago now, on 1 July 2016. So an ESIC can claim the R&D tax incentive. Becoming an ESIC company, I'm not too sure if too many people know, but the advantage of becoming an ESIC company is that whoever invests into an ESIC gets two key advantages. The first being that their investment amount, 20% of it, is included as an offset on their personal tax bill, as well as any of the shares they purchase gets what's called modified capital gains tax treatment. So if you hold on to those shares for more than 12 months, less than 10 years, you don't have to pay capital gains tax on it. So yes, an early stage innovation company can claim the R&D tax incentive, and to take it one step further, by claiming the R&D tax incentive, you can help qualify yourself as an ESIC through the 100-point test. So you can either get 50 or 75 points by claiming the R&D tax incentive in the prior year, and you're only 25 or 50 points away from getting 100 points in order to be disclosed as an ESIC. So we're getting a question here around, is the government incentivizing advanced manufacturing, including AI, IoT, robotics, and quantum computing? The short answer is yes, the government is definitely incentivizing this type of stuff through both the R&D tax incentive as well as through other government grants which come up. So the manufacturing modernization grant is very much geared towards these types of areas, as well as other government grants which could be popping up between now and the end of the financial year, which is geared towards more smart manufacturing. As those details come out, we'll be putting out various announcements in the BridgePoint Group newsletter. So we spread as much information as possible to make sure that people don't miss out on these various grant opportunities. But I imagine that this year and next year, there's going to be a very big push from the federal government in terms of putting out grants specifically aimed at AI, IoT, and advanced computing. What sectors they're prioritising? In terms of government grants, the main sectors which are getting prioritised, manufacturing is a big one. I think one of the byproducts of COVID is that we realised that Australia's manufacturing capability, capacity is definitely not where it used to be and definitely not where it should be. So manufacturing is going to be getting a big push, as is defence, agribusiness, food and beverage, and health. But the main one, I think it's going to be, it's manufacturing. And I think there's going to be a big push towards advanced manufacturing techniques, methodologies, and the like. A lot of the information available regarding the sectors, what's going to be available, etc., we publish in our newsletter, and we also publish frequently on our LinkedIn. And we have quite a robust discussion on our LinkedIn page regarding, what's going to be coming up, what to look out for, and how to best position your business to maximize any government grant help that's available to you. So ladies and gentlemen, thank you all for joining. The pleasure is all mine, and looking forward to continuing this discussion with you guys and helping make sure that manufacturing in Australia not just survives, but also thrives in the coming years.